Hello, you may be wondering why I'm showing you a photo of a pile of cash with a crown on top. It's to quickly convey a simple idea. It's an idea that can radically transform your financial future. And you may have guessed what the idea is just from the photo. It's that cash is king. It turns out that cash is king, not just in the sense that it can buy what you want, and that people who have cash usually have an easier time getting their way. No, the phrase cash is king also contains within it the secret to market-beating returns in the stock market and to your retirement prosperity. Believe it or not, this is a secret that has only just really been revealed in just the last few years through some very complex mathematical analysis, but which can actually be boiled down to a simple calculation any high school student can do in 2 seconds, and which I'll show you in just a moment. Now listen, if you're like me, the last thing you want to do is watch another friggin' video on investing. I get that. But trust me when I say this particular video could literally change your life. I know that sounds hard to believe, but it's true. The reason I can say that is because what I'm about to reveal to you in this video changed my life. It introduced me to a simple but little understood approach to investing that many people have heard about, at least recently, but which almost nobody uses correctly or consistently. And yet this investing approach has been so successful that it has given me the life I've always dreamed of. What's more, famous investors like Warren Buffett have been quietly using this strategy for years to build their fortunes. And when you see what I'm about to show you in this video, I think you're going to be amazed. In fact, when we finally counted up the results of this simple investing secret over a 10-year period, we discovered that a $250,000 starting nest egg produced a total of $761,389 in profits over the test period, which works out to $1,011,389, or a 204% total return. What's more, if you're 55 years old and plan on retiring at 65, that's enough for you to collect the equivalent of $8,166 a month, increasing every year due to inflation for the next 30 years, and without running out of money. With a typical Social Security payment of around $2,400 a month, that would give you a monthly income of around $10,566. If you're nearer to retirement or already retired, this system will also help you accumulate a fast nest egg in a hurry, enough that, along with Social Security, you'll be able to live independently. That's why I urge you to drop whatever you're doing and stay with this message all the way through. I'll show you why you can retire with a very healthy income, even if you don't have much cash put away yet and don't have much time before you quit working. The real reason why the total return for retail investors over the past 20 years has been closer to 2.5% a year on average, not the 9.85% advertised for the S&P 500. Why younger investors, those in their 30s and 40s, have the potential to become genuinely wealthy simply by following this one simple rule when they invest. What the government and Wall Street are not telling you about index funds and index investing, what sequence of returns means, and why your entire financial future could depend on your knowing what it reveals about your retirement, and that's just for starters. Now, before I get into all that, I should take a moment to tell you who I am. My name is Tim Plain. I'm a former mathematician who became an F-16 fighter pilot in the United States Air Force, and then a stockbroker. And believe it or not, these two callings have more in common than you might think. I currently serve as Senior Research Analyst for Income and Dividend Investing here at Investors Alley. And I am the editor of the Dividend Hunter and 30-Day Dividends Investment Advisory Services, all focused on generating consistent and reliable income for regular investors, no matter which way the market goes. Now, when I was a stockbroker for more than 10 years, we used all sorts of very complicated methods to evaluate stocks and try to create successful investing programs for our clients. We looked at all sorts of indicators and used all sorts of methods. We used technical and fundamental analysis, stochastics, all that stuff you read about in investment newsletters and trading publications. Most of all, that was a complete waste of time. And the handful of methods that were actually useful were often so complicated no one could understand them. So if you've struggled to make money investing over the past 10 or 20 years, as the stock market crashed and rebounded over and over again, don't worry. I can help you. Believe me when I say this, it's not your fault. And you're definitely not alone. As we'll see in a moment, millions of people are in exactly the same situation. In more ways than one, investing today is like walking into the world's biggest casino, with millions of flashing lights going off in your face, bells and whistles everywhere, and people screaming and yelling 24/7. The noise is deafening, and there are a lot of experts trying to distract you and separate you from your money. For years, I struggled to make money for both myself and my clients. But then I discovered the mathematical secret that I mentioned earlier that completely changed everything I knew about investing and transformed my life as well. I discovered that if you totally ignore 99% of what you hear about the stock market and different stock indicators, and instead concentrate on just one simple mathematical calculation, a calculation I'm going to show you in just a minute, you can outperform almost all other investors consistently by 3, sometimes 4 to 1. This one simple idea can add literally hundreds of thousands, even millions of dollars to your portfolio over the next 5 to 20 years. That's not an exaggeration. What I want to show you could be the difference between you enjoying an income of $7,000 to $20,000 a month guaranteed, or ending up broke, barely surviving on Social Security and dependent on the charity of friends and family. And that's true even if you haven't saved very much money and are either already retired or only have a few years left before retirement. I know that sounds hard to believe, but it is literally true. And I'd like to share that secret today with you in this video. So let's get right to it, shall we? Okay, the first thing you have to understand is this. Index investing is dead. By that I mean if you think you can just park your money in some Vanguard index funds, or any other company's funds for that matter, forget about them. And you'll end up with a prosperous retirement. Forget about it. For one thing, the interest rates that form the core of what is called modern portfolio theory have been near zero for almost a decade now. The current slow growth economy means that interest rates will be increased by the Fed at a very slow, moderate pace. A quarter point here, a quarter point there, and this will go on for years, if not decades. Investors cannot expect a return to the interest rate levels of the first half decade of this century very soon. That means that one of the central pillars of a traditional retirement relied upon by literally generations of retirees, which are decent interest from CDs, money markets, and so on, is gone. And it's actually far worse than that. What brokers don't tell you is that the actual returns that real-life investors get in the stock market are substantially less than the market averages, even when the market averages were good. And the reason is simple. Real people are rarely 100% invested in the market at all times. They invest a little, then panic, pull the money out, try to time the market, and so on. When the 2008 and to 2009 market crash hit, many investors panicked and pulled out what was left of their nest eggs out of the market and missed the market rebound of the past 7+ years. They sold at the bottom and never even saw the coming top. If that was you, don't feel bad about it. It was you and about 50 million other people. According to Dalbar, a market research firm, the actual returns investors have achieved over the past 10, 20, or 30 years are half or less of what the S&P 500 returned. For example, over the past 20 years, the S&P 500 has averaged about 7.95% a year. But the returns of average investors in an asset allocation portfolio, which is a mixture of equity and bond funds, has been just 2.47%. That's right, 2.47%. That's less than the rate of inflation. The same pattern is seen in whatever time frame you choose to look at. Investors in equity funds alone do a little better, but not much. While the S&P 500 has posted an average annual return of 10.04% over the past 30 years, including dividends, equity fund investors have averaged only 3.79%, while asset allocation fund investors have averaged only 1.76%. And here's another complication. No one can see the future, but if you've been paying attention for the past several years, you likely know that stock returns, as a whole, are expected to be far lower over the next 10 to 20 years than they've been in the past. No less an authority than Jack Bogle, founder of Vanguard, and widely considered to be the father of index fund investing, recently predicted that equities will generate average returns of only 6% a year for the coming decade, and bonds just 3%. That's just a little more than half of what the S&P 500 has averaged over the past 30 years. And Bogle isn't the only one saying this. Other experts claim that getting even 6% a year in the S&P 500 may be a stretch. According to a report from Credit Suisse, whenever stocks have reached price levels similar to what they are today, the S&P 500 has averaged between 2.5% and 3.5% for the next 5 years. And of course, if real stock index investors are only able to make 3.79% in a year when the S&P 500 was averaging 10%, how much do you think investors will make when the S&P 500 is only averaging 6% a year, or a little more than half of what it used to make? The answer is not very much. And this will impact you whether you are 5 to 7 years away from retirement, already retired, or even if you are in your 30s and 40s and have many years before you quit working. Let me briefly show you the mathematics of it, how it works out in real-life scenarios. Let's say you're lucky and currently have $400,000 stashed away in your retirement account, 401k or whatever, and are 5 years away from retiring. Now here's what happens if the experts are right and you only get, say, 6% a year on average going forward and need $80,000 a year to live on. As I said, the reality is that real-life investors far underperform the indexes, but let's be optimistic. Starting with $400,000 and assuming you retire in 5 years at age 65, here's what it looks like on Mutual of Omaha's popular Are My Retirement Savings Sufficient calculator. At 6% a year, and assuming you withdraw around $6,500 a month to live on, you'll likely run out of money completely at age 74. At that point, you'll only have around $2,400 a month to live on from Social Security. Now that's the bad news. But here's the good news. If it were possible to get returns more in line with what the S&P 500 has achieved over the past 30 years, something between 10 and 12% a year, what would happen then? Well, the answer is you'd actually be okay. Starting with $400,000, if you could earn 10% to 12% a year, collect some income from dividends, and get Social Security, it would be enough. In fact, if you could earn an average of 12% a year investing, you'd have enough to collect $80,000 a year for the rest of your life, increasing each year for inflation, and still have an extra $1.3 million left over to leave your kids or heirs when you kick the bucket at age 94. It's true. You can see the numbers yourself. As you can see, at 12% a year, you'll have a final annual income of $218,552, with $66,078 of that coming from Social Security and $152,475 coming from withdrawals from your retirement accounts. You won't be rich, but you'll be comfortable and independent and won't have to depend on anyone. So what does this all mean? Well, to put it simply, returns matter a lot. They mean the difference between retiring with dignity, independence, and peace of mind, and ending up broke, unable to provide for those you love, desperate, and dependent on the kindness of friends, family, and charities. And here's the best news of all. You can absolutely reach that 10% to 12% range of returns by using a simple investing method that has only come to light in the last few years. and which is so simple any high school kid can use it. And here it is right now. The number one most important factor in investing is to invest solely in companies with consistent histories of raising their dividends. You've probably heard this before, but trust me on this, very few people use this approach systematically, consistently, or correctly. What people usually do is invest in high dividend stocks. They hear about a stock that pays over 6%, say HCP, and they invest in that. But high dividends are not what I'm talking about. In fact, they're sometimes the worst thing to invest in. We all know about stocks that pay high dividends because they're plummeting in value or aren't making any money. You get the 8% or 10% dividend, but the stock itself tanks. You end up losing money overall. That's not going to solve our problem of low index fund returns. No, what I'm talking about is the rate of increase. The rate of increase is the secret indicator that is a proven predictor of future stock performance. In other words, and this is where we come back to the cash is king idea, you only want to invest in companies that pay you cash and that pay you more and more cash each quarter and every year going forward. It's that simple. If a company stops paying you cash, that is, if it eliminates its dividend or cuts it in any way, you dump it instantly. Here's a concrete example. Let's say a stock pays a modest dividend starting out, say 3.5 cents a share. But it increases that dividend each and every quarter by 5%. Good examples of growth like that are from companies like EQT Midstream Partners and Sunoco Logistics Partners. You want to invest with dividend growth rates like that because over time, the dividend increases can translate into rapidly rising stock prices. The stocks may decline temporarily due to bad economic news in general, but eventually, the pressure from all that cash pushes the stock price upwards. You end up with a fat cash payment every month or every quarter. And with stocks that have appreciated 10%, 15%, sometimes 20% a year or more. Let me give you some examples. Take a look at this stock, Kinder Morgan. The IPO occurred in February 1997 at $10.62 a share with an initial annual dividend of 94 cents a share, which worked out to an annual yield of 8.8%. Not too shabby. But here's why this turned into a prime stock pick. The dividend grew at a 13% annual compound growth rate for 18 straight years. Eventually, the company was bought out at $103 a share with a final dividend rate of $5.58 a share. Had you bought 1,000 shares of this stock back in 1997, once you realized the dividend was growing at 13% a year, you'd have made about 10 times your money on the stock itself, turning every 10,000 invested into 103,000. And you would have earned another $58,660 in dividend payments along the way. Your total return over 17 and a half years, a whopping 16.83% a year, or 1,522% overall. Think of rising dividend stocks like one of those geysers in Yellowstone Park. And cash from earnings is like the steam that is building up underground. Eventually, all that money pressure builds up until one day, boom, the stock takes off and rockets higher. That's how you beat the market consistently and retire with money to spare. Now you can use a simple online calculator to figure out what the rate of increase is for dividends. Here's one at MoneyChimp. It takes about 3 seconds. It's just one of many examples out there. If a stock pays an annual dividend of 60 cents today, and in 5 years pays a dividend of $1.30, the rate of increase is 16.7% annually. And this, my friend, is the single most important indicator of a stock's future appreciation, the rate of increase for its dividends. I've just given you the secret of the ages, a simple investing approach that can make you genuinely wealthy if you apply it consistently. I look for an annual rate of increase of at least 12%. For at least 4 quarters in a row without any breaks. Here's another example, RLJ Lodging Trust. It had its IPO on May 11th, 2011, and it immediately dropped to $12 per share with an annual yield of 3.4% on its dividend. But the dividend has been increased 5 times in just 4 years, and it is now 120% higher than in 2011. The result? The stock doubled in value in just 4 years, from $12 a share to $24 a share. Even with a recent dip in the stock market as a whole, that's an average annual compound return of 18.92%. One more quick example. Simon Property Group, which owns premium outlet shopping centers. Stock symbol is SPG. 6 years ago, SPG had a share price of $80 and an annual dividend of $2.40 a share, or a yield of 3.0%. But what did I say is the number one most important factor for investing and retiring with enough money to enjoy life? That's right, a rising dividend payment. And get this, SPG has increased its dividend 15 times in the last 6 years. That's right, 15 times. The shares are now selling for around $210 a pop. And SPG's annual dividend is now $6.60 per share. The result? SPG has handed investors an average annual compound return of 20% a year, turning every $10,000 invested in 2011 into $34,590 today. So this really is the holy grail of investing, the goose that lays the golden egg, the Midas touch, all rolled into one. Cash really is king. If you want to become wealthy, invest solely in companies that pay you cash in larger and larger amounts. It's really that simple. You can forget about 99% of everything else you read about in stocks. All the rumors, all the technical analysis. Just concentrate on the cash and on whether or not a company pays rising dividends over time. The truth is, investing in rising dividend stocks is the hidden wealth generation secret of the world's wealthiest investors. Men like Warren Buffett, Sir John Templeton, Ray Dalio, and many others. For example, The Street recently analyzed Buffett's top 5 stock holdings: Wells Fargo, Coca-Cola, American Express, IBM, and Walmart, and found that every one has had a rising dividend. Walmart has paid a rising dividend for 40 years, Coca-Cola for 50 years. So this is not just some crazy theory I dreamed up. This is the secret behind some of the greatest investing fortunes in history. Now, before I get into the details of how I identify stocks with rising dividend payments, let me say a word about why it's so difficult for the average investor to do this. One reason, there is almost no information available on the internet about the key metric, which is the percentage increase in the dividend yield. Sure, you can find different advisors promoting this or that dividend stock, but if you really want to analyze the stock's cash payments, you have to look in many different places and make the calculations yourself, by hand. In other words, it takes a ton of work and lots of your free time. But I'm going to simplify that for you right now. So if you decide to join me in this powerful approach to growing your wealth, you'll have a head start on most other investors. I've created my own system for identifying and tracking rising dividend stocks that I call the automatic income machine. I call it the automatic income machine because that is precisely what it is, a proven method for creating multiple streams of automatic income. Income that can support you, whether you're already retired, just a few years away from retirement, or even decades away, and that will build wealth along the way. There are 3 factors in my approach that I would like to share with you right now. First, I build my own databases of stocks in the various high growth categories with data on current yield and historic dividend growth rates. I spend hours upon hours searching through financial reports, cash flow statements, and other sources of detailed financial information that most people don't have access to and probably have trouble reading. Then I make a point of checking and rechecking the dividend growth rates so they are accurate. As I said, these calculations are not readily available anywhere. With every dividend announcement, I access my database to update the dividend growth percentages for that stock over the last year. With a sort to rank dividend growth, those highest growth rates are the stocks I review first for investment potential. But they're not the last. Then I really dig into the financials and guidance of the individual companies to see if the growth can be sustained into the future. This is where my years of experience as an investment advisor and stockbroker really pay off. The third thing I do is track the relationship between the current yield and dividend growth. This is a little counterintuitive for many people. That's because high growth rate stocks will often have lower yields. But again, what we want to see is high dividend growth, 15% to 20% annual increases in the dividend payments. And it is this growth that will ultimately result in high total returns, capital appreciation, and dividends. That's something I learned as a fighter pilot, to keep my eye on the ball. Our goal is retirement wealth and income. So if the total return from our stocks is high, we can live with relatively low initial dividend rates. In fact, if you find a stock that has a high historic dividend growth rate and an above average yield, that is actually a warning sign not to buy the stock. The high yield tells us that the growth has most likely stopped or slowed significantly. These are the high yield stocks that typically plummet in value after you chase the double-digit payment rates. The fourth and final aspect of my system is knowing how long to hold on to the shares of the stocks you select. Stocks like Kinder Morgan Energy Partners, which I mentioned earlier, that grew dividends at a high rate for a couple of decades, the so-called dividend aristocrats you sometimes hear about, are rare. More typically, a high growth rate can be sustained only for several years. At some point, the company will enter a slower growth middle age. My system sets an initial hold target of around 2 years. By then, I'll have a good handle on a company's continued growth trajectory. If the growth in the dividend is slowing after 2 years, it's time to sell and replace that stock with a new, higher growth rate prospect. These are often new companies spun off by larger parent or sponsor corporations. This is very important to remember. There will always be new, high growth rate income prospects coming into the market with IPOs and spin-offs that go into the database to be followed as they develop a growth track record. Are you following me so far? I realize we're covering a lot of ground very quickly, but I want to give you as much useful information as I can. Now, as you can see, some of this gets a little complicated. You can definitely do all this on your own, but it takes quite a bit of time and more than a little analysis and thought. I've given many live public seminars about my rising dividend investing method, when I didn't even share a fraction of what I've shared with you today. And many people come up to me afterwards and say, "Tim, this is what I've been looking for years, but I don't know if I can do this on my own." And trust me, I get that. There's a lot to absorb. I've been developing this automatic income machine over the past 20 years. What's more, when you realize that index investing just isn't going to give you the returns you need, and that you can create multiple streams of cash income while also building up your core wealth step by step, I understand why people are frustrated. So, after many months of planning and years of refinement, I've launched a done-for-you version of the rising dividend approach I've shown you in this video. I call it, naturally enough, the automatic income machine. Some of the most trusted names in the financial world agree that the strategy that is at the heart of my automatic income machine system produces results far beyond what you can achieve with passive income investing. The Motley Fool calls rising dividend investing system a crazy simple strategy you should seriously consider. Kiplinger's says it's a dividend growth strategy that has stood the test of time. Forbes magazine says the best choices for any portfolio are stocks that grow not only sales and earnings, but also dividends and capital gains, and do so on a steady basis, often for decades. And I have to say, our results since the launch have exceeded my expectations and those of my subscribers. As of right now, we're up 19.47% over the past 6 months. We started with a real money portfolio with $250,000. And as of now, we have an account worth just under $300,000 for capital gains of $50,000 in only 6 months. We sold 2 positions early on for gains of 92% and 45%. What that means is if you're looking for a realistic, proven way to grow a small amount of money into a decent-sized portfolio that can support you and those you love for the rest of your life, and maybe even leave something for your kids or heirs, then I can honestly say that my automatic income machine is worth trying out. It's as good a system out there and better than most. In practical terms, it's a way for beginning and intermediate investors to literally copy what I am doing with my own investing and advisory accounts. And because we're not short-term, but intermediate investors, there's no big rush to get these investments done all at once. When I tell you about a new rising dividend opportunity, you don't have to drop everything you're doing and call your broker. You usually have a few days and sometimes even weeks. You simply copy my investments in your own brokerage account, or enter the investments in your demo account or spreadsheet if you're merely testing us out, or go ahead and place your buy orders if you're ready. The point is, you literally get to look over my shoulder and watch as I make these investments. You don't have to reinvent the wheel. You just take advantage of my decades as a successful dividend investor and simply do what I do. As I said, you can start slow, even with zero money, and simply watch and learn. Then once you see how these rising dividend stocks perform, you may consider bigger investments. The other big benefit of the automatic income machine is peace of mind. I'm not saying you'll never worry about your investments. That wouldn't be true. With an economy as unpredictable as ours, you're always going to be thinking about what might happen. But unlike other investing strategies, the investments we make in the automatic income machine are extremely conservative. We invest slowly in very profitable companies that hand out bigger and bigger cash payments. This lets you sleep at night. For that very reason, you can count on me not to be reckless or take big chances. And please don't take my word for all of this. Here's what some of my subscribers have to say about my dividend investing recommendations. John O. of New York wrote to tell me, "What a privilege to have access to your sage advice. I'm shaking my head in disbelief at how my dividend portfolio is performing. Thanks again." Jerry C. in Idaho wrote and said, "I just wanted to take a moment to thank you for your wonderful newsletter and dividend tips. I have subscribed to a lot of newsletters in the past and found them to be very hard to understand. Your information is easy to comprehend, short, and to the point." Annette W. of Tennessee told my publishers, "It's been such a relief to realize that Tim's service is not a scam. There are so many analyst reports and services available through the internet, and many don't seem too legitimate, even from my novice perspective. I was leery about emailing my questions as well, but put at ease with Tim's response. Thanks again." James E. of Washington State wrote to me about a recent stock recommendation. "NGL performed like a dream and even exceeded the high end of my expectations. I think this is the third or fourth idea that I have received from you where I quickly made more than $10,000. And Tony J. from Georgia, who has subscribed to countless services over the years, said, "I have to say, I have subscribed to a number of newsletters over the last 20 years of my investing life. They all promise you'll make your fee back in no time. Yours is the only one that lived up to that. It is no exaggeration that I've made 9 to 10 times the first-year fee before dividends using the starter portfolio. So here's what you get when you agree to a no-strings-attached test drive of the automatic income machine rising dividend strategy. First off, you get my automatic income machine model portfolio with 10 to 12 rising dividend stocks based on a starting account size of $250,000. You can adjust our recommendations for smaller or bigger accounts. The goal is to grow this initial $250,000 account into $500,000 in 5 years and into a minimum of $1 million in 10 years, so you can create monthly income of at least $8,000 for life. I do all the research and analysis for you based on my years of experience as a professional stockbroker and financial advisor. Also, I use only the very best 10 to 12 rising dividend stocks. These are stocks likely to go up in almost any market or to rebound quickly in a temporary market correction. What's more, our targets are conservative. You could easily end up making much more on specific stocks, as much as 40% a year in some cases. In fact, in our first 6 months, we closed out 2 positions for 45% and 92% respectively. I can't say that will happen with every stock we buy, but the potential for a quick win is always there. Specific recommendations for each investment. I tell you precisely how much to pay for each stock, how much of our model portfolio cash we're investing, and any adjustments you may need to make, and when to get out and at what price. This is a very hands-on service that leaves nothing to chance. A buy and hold strategy with intermediate term targets. This is not a trading service with quick in and quick out trades, but neither is it a portfolio of forever stocks that we never look at again after buying. Our goal is to generate 15% total annual returns. So we will sell positions when we find better opportunities to lock in that 15% gain. We focus on the period of maximum dividend growth for companies. And we also reinvest the dividends to grow our account even quicker. The monthly automatic income machine newsletter. You'll get A to Z training in the form of our monthly newsletter, email alerts, and occasional videos, so you can quickly master the details of rising dividend investing. Each month, you'll get a complete summary of our current positions, an analysis of current economic conditions affecting our stocks, and both short-term and long-term guidance for the overall strategy. Weekly alert and update emails every week. When we're not publishing the monthly issue, you'll receive an email from me with an update on portfolio, adjustments to our strategy, and other useful information so you'll get the most from your subscription. Live monthly strategy session calls. Every month you can join me and an elite group of automatic income machine subscribers for a special live strategy call. We will go over our strategy for the upcoming 30 days, review the current portfolio, and most important of all, answer any questions you may have live and in real time. Analysis of upcoming IPOs of dividend stocks. I'm constantly on the lookout for newer, better positions for our model portfolio. And as a result, I regularly track spin-offs of profitable companies as potential candidates for our rising dividend strategy. I keep you fully updated on companies I am tracking, so you know far in advance if I'm considering a change to our model portfolio. IRA and retirement account friendly recommendations. I realize that some subscribers will invest in taxable accounts, some in retirement accounts like IRAs and 401k accounts, and some in both. As a result, I tell you which recommendations are suited for which type of account. For example, certain types of master limited partnerships, MLPs, are not appropriate for retirement accounts, but do offer tax advantages for regular brokerage accounts. We will alert you to these refinements for each position. Trading updates when necessary. It won't happen often, but occasionally there may be special situations when I need to get in touch with you right away. I will alert you via email. My goal is to stay in touch through these alerts, regular emails, our monthly newsletter summaries, and our monthly strategy session calls. Special instructional online seminars. Throughout the year, I provide special instructional online seminars that go into more detail on the rising dividend strategy in general and on our portfolio in particular. My goal is to train you to carry on this strategy on your own. Not to be morbid or anything, but if something ever happens to me, I want to know that you'll be able to stick with this strategy and be able to provide yourself and those you care for with the financial support you'll need in the future. I take my responsibility as your advisor very seriously, and I want to make sure that you'll have the money you need no matter what. So I want to give you a barrel of fish, but also teach you my method for catching fish. Now I know what you're thinking. This must cost a fortune. After all, if you had started with $400,000 10 years ago and earned the minimum annual return we shoot for, you could potentially have $1,618,223 sitting in your brokerage account right now. But while the profits you can make on rising dividend stocks vastly exceed those of hedge funds, we can't and don't charge any performance fees. Instead, we charge a flat membership fee, and you don't even have to pay that if you decide our service isn't for you during your first 60 days of trying it out. The reason I am offering the automatic income machine service is that at this point in my life, the greatest thrill I have is watching other people build up their nest eggs so they can retire with dignity and a feeling of independence and pride. It's the biggest ego rush there is, truly. I suppose it's a bit of hero complex left over from my days as an F-16 fighter pilot and instructor. But I genuinely like helping people. There is nothing I like more than getting an email from someone who says, "Thank you, Tim. I just got a dividend payment of $8,750, and it really makes a difference for my wife and me to get these regular cash payments." As I said, I've been teaching my rising dividend investing method for the past few years at various investing education seminars. But I've been frustrated by the fact that people who learn how to invest often don't actually follow through. So I decided to create the automatic income machine, not so much to teach successful income investing, although it does do that too, but simply to give people the specific recommendations they need to grow their wealth and enjoy a prosperous retirement. In other words, I provide you with everything you need to start creating your own personal wealth from these rising dividend strategies, including a complete model portfolio, starter portfolio for new members, monthly strategy calls, monthly newsletter summary, profit alerts as needed, along with answers to all of your questions. I do everything I can to help you grow your wealth quickly and safely, so you will have a constant stream of income either right now or when you retire. And I back up this promise with an unconditional 60-day guarantee. Now, before I tell you my offer, I want to repeat that I will not and cannot ask for a percentage of your profits, like some professional money managers do. And I'm also not going to charge you $20,000 a month, the price that many wealthy people pay for this kind of hands-on help in retirement planning and investing advice. I'm not even going to charge you the $3,000 to $5,000 in annual membership fees that most other elite wealth building advisories charge for rising dividend recommendations. Instead, I'm going to give you 2 full months to test out my rising dividend strategies and specific recommendations without risk. I want you to see for yourself what it's like to create multiple streams of cash income flowing into your account every quarter and sometimes every month. I especially want you to see what it's like for your stocks to mysteriously go up in value when everyone else's stocks are flat or even going down. And in the unlikely event you decide the automatic income machine is not for you, for any reason, just let me know before the end of the 60-day trial period, and I'll refund 100% of your money, no questions asked. Now, a 1-year membership in automatic income machine is like many other dividend services out there, regularly $1,995. But you don't have to pay anything close to that. During a special membership drive we're hosting right now, we're offering a whopping $1,000 off the regular price. That's right, $1,000 off. That means you don't pay $20,000 a month like financial consultants charge. You don't pay $3,000 to $5,000 like subscribers to some elite wealth building services. You don't even pay $1,995 for the regular price. Instead, you can test drive Automatic Income Machine for 1 year for not $20,000, not $5,000, not $1,995, but only $995. That's not a mistake. It costs only $995 for a complete wealth creation system that can hand you the annual returns you need to retire with real prosperity. To collect $8,166 a month on every $250,000 account, for example. Not only that, but we even offer an easier way to get started. An easy installment plan billed quarterly so you don't have to go all in if you're not ready. That's what I call a true bargain. You'll be gaining an investing system that will help you earn a regular income for the rest of your life. working for just a few minutes a week. And you'll likely recoup the cost of the strategy on your first few quarterly dividend payments. Some of my subscribers have made $10,000 on a single investment. All the rest is gravy. You'll discover the most powerful investing strategy there is, one used in different ways by the most successful investors today. You'll learn how you can potentially earn between 12% and 15% a year consistently by putting the power of rising dividend stocks to work with your portfolio. And by the way, this special low price is good for as long as you wish to continue, which means that when we raise the annual subscription back up to $1,995, you can continue to save $1,000 a year and your rate remains only $995. And trust me when I say this deal and this price will definitely not be available for long. After all, we give all of the viewers of this video a first crack at this service. We're going to be sending out invitations to our full list, and then to lists of some affiliated financial publishers we work with. And then the price will be back to $19.95. So if you think you might be interested, my recommendation is that you lock in a low charter price now, and then cancel later if you decide it's not for you. And now for the bad news. Strictly limited to 500 qualified investors, helping ordinary investors increase their incomes before and after retirement is what I do for a living, and have done for more than 25 years. This is very hands-on, personalized service. It's solely for investors who want to dramatically increase their income from investments and build or rebuild a substantial retirement nest egg. That's why I've decided to limit this charter membership and automatic income machine to only 500 members. For one thing, that's the maximum number of people we can host on our monthly live strategy sessions. We don't want any of our members to miss these important calls just because of a technical glitch or an overloaded system. Also, I provide all members with my personal email address and answer all the questions I am asked. If I accepted more than 500 members, I don't think I could respond adequately or promptly to everyone's questions. I do expect this service will sell out very quickly, and all 500 of those slots will be taken. As I mentioned, we're extending this invitation first to everyone who is watching this video presentation. I want you to have first crack at getting one of the 500 spots, and there are actually already fewer now. Once those 500 spaces are taken, we will officially shut our doors. We will likely have a waiting list, but that means you'll have to wait until someone leaves before you can get in. And even worse, you could end up having to pay the full rate of $1,995 per year and miss out on the $1,000 discount that comes with this VIP first priority offer. So if you're at all intrigued by this approach, by the way, you could potentially turn a $250,000 nest egg into a monthly income of $8,166 for the rest of your life without ever running out of money, then here's what I'd like you to do. Click on the big button below this video and just agree to test drive the automatic income machine for 60 days. You're not committing to anything at this point, then really put the automatic income machine through its paces. Download my model portfolio. Study your first issue of the monthly newsletter and special reports. Set up a spreadsheet and investigate all of my recommendations. Read all about them and see how they've performed over the past few months and years. I would also make a few test investments. Once you see how consistently rising dividend stocks can supercharge the performance of your portfolio, I guarantee that you'll be hooked. Plus, as I said, you have nothing to lose. If you're not delighted by the results and the potential you see in this innovative new approach to wealth creation, simply call our customer service number within the first 60 days and you'll get back every penny you paid for the service. No questions asked and no hard feelings either. This is truly a zero-risk offer, but I urge you to act right now. This special membership rate may not last long. To me, the risk-reward ratio definitely seems worth it. Make a fully refundable deposit to test drive an investing system that aims at producing real-world gains of up to 15% a year, enough to turn every $250,000 account into a monthly income of up to $8,166 for life. If I actually am who and what I say I am, a straight shooter who helps people profit from one of the very few investing programs that works in the real world, then accepting a no-risk test drive of the automatic income machine will be the smartest thing you ever did. So click on the button below and let's get started immediately. Sometimes you just have to go for it. This is one of those times. This is Tim Plain. I look forward to working with you to create a prosperous future for yourself and those who depend upon you.